What is going on, everyone? I hope you all have a wonderful day. Hopefully, the end of week treated you well. If not, then we got next week where we get to wake up, hopefully, and do it all over again, right? I'm gonna be straight up, as transparent as possible today. Today did not go as well as I would like to have been. I deviated from my plan and got absolutely demolished for it. And I deserve it, right? If I'm going to act stupid, if I'm gonna play stupid games, then I'm gonna get stupid rewards, right? So that's exactly what happened today. And I'll delve into that here in a little bit. I'm gonna try to make this a quick one. I know most of these videos that I post are usually like 20 minutes long. Hopefully today we can make a record as far as time goes. So let's go ahead and dive into it. If you guys don't mind, leave a like down below as I do. Post this as my journey, kind of a journal, and just hopefully you guys are getting some type of education out of this. As it's taken me a little bit of time to understand and read these charts the way that I read them, and then hopefully provide this information to you, and you can benefit from it. Anyway, let's get into it, guys. So we are in a firm 5-month balance. Nothing has changed on the monthly in quite some time. However, you look at this. I remember a couple of days ago, earlier this week, the monthly candle was not looking good at all. The monthly candle was looking rather nasty. It was looking like this candle here on February, where we were rejecting that 4150 to 4200 area, and now coming in at the end of the week, end of the month, somehow, some way, these buyers got their game together, these bulls got their game together, and we began to push up and attempt to find acceptance in this area. As far as the target goes, if we get above the 4208.50 level, watch out. There isn't much above us from a monthly or a weekly or a daily standpoint. There really isn't much overhead resistance. And if this market really wanted to, we could get some good legs to the upside. Now, the question is, do we continue to hover up here and find and consolidate and fight this area for a little bit longer coming into the Fed? Good possibility, right? The way this market is, it's so short term. You never really know. But right now, odds favor at least continuing to test this balance high. Now, keep in mind, balance rules are in effect, right? You get near balance and you either go through it and get continuation through that balance area, or you get near it and reject and roll over and revisit the other side of the balance, right? So right now, balance rules are in effect, and it's not a bad risk reward for any short sellers to put on positions here for a potential swing trade, right? So it's also not a bad area to start taking profits if you are someone that bought back here near the low at 40.68, right? You're 100 plus points in the money. And if you wanted to take some profits, you can. All right, let's go ahead and look at our weekly time frame. Weekly came back into a firm 4-week balance. We'll be using last week's high as our balance high, but I just wanted to show you how we're looking and how the weekly is trading inside of this monthly balance. And you can see we had a good opportunity to take it out last week, take out that balance high, and then rolled over coming into this week, putting ourselves into a balance. And then this week we're finishing with a strong candle here, strong hammer candle to say the least. So the weekly balance high, now that this week has come to a close, we know what our weekly balance looks like, right? I remember telling you guys early in the week as we came in, we were determined how we would say this weekly balance would be forming. If we did not get much further into this weekly area here, then we would just encompass a 4-week balance using this 4194.75 range to the low here of 40.68.75. So since we did not put a new low in the week, that will be our balance area. 40.68.75, right? We'll use our most recent swing highs and most recent swing lows. 40.68.75. So now the weekly is in a balance. If we take out the balance high at 41.94.75, odds favor getting that monthly balance high, right? So this will be our balance low. So there you have it. There's our balance. That is what our balance looks like as of right now. Something to keep in mind is we've been setting higher lows and potentially higher highs in the near future. Do we continue this trend? Did we just set a higher low here for us to come up, rally a good little bit, pull back and set more series of higher highs and higher lows and set new highs on the year? It's a good possibility. If we can get over February's high at 4208.50, then we will be setting new highs on the year, right? And then after that, we'll just start revisiting this, February's high, and then above that, you don't have anything until this weekly high from a weekly standpoint of that 4327.50 area, which was also August high. So weekly looking good, looking strong. Next week, if we take out this balance high area, the weekly will begin to one time frame up. Now let's look at our daily. Look at our daily here. Daily. This is what it looks like inside of that balance area. It's inside of the weekly balance, right? You can see how we've traded inside this weekly balance so far. So if we take out this balance high, the weekly will be one time framing up. But as far as the daily goes, we put ourselves back into a balance yesterday. And then today we began one time framing up as we took out that balance high. Now in yesterday's video, I did say I was going to use 4171.75 as my balance high area. And then looking back at it, I kind of wanted to look at the 44.20, or excuse me, the 64.25 area as my balance high. Either way, whatever high you used here, you are now one time framing up on the daily. So the daily is one time framing up, and if we continue to one time frame up, because today's high was the weekly high, if we continue to one time frame up and take out today's high, which is the weekly high, the weekly will begin one time framing up. So we are breaking out of balance to the upside. The question is, do we find acceptance over the 4,200 level, which is a big battle zone for anybody in that area? All right, now let's get into what happened today and the trade that I took that cost me roughly 252 points on the short side. Thankfully, just MES, right? Just MES, but nonetheless, 252 points is absurd, and I'll show you exactly what I did and how I hurt myself. So if you paid any attention to this market at all today, it was a grind up to the upside. Right out the gate was a nice push to the upside after A period opened up inside a set of single prints from the previous day. After we opened up, we pushed up, got above the previous day's high in the second time frame, B period, and then we just rocketed up to the upside. Shorts began to cover, and we began to push up higher with momentum buyer. And then in C period, we backfilled pretty good, almost filling that set of single prints until D period, and then D finally filled that set of single prints and stopped the one time framing up. After that, we began to grind back up to the upside and then try to set new highs on the day. We did that by one time framing up in almost every time frame except for the last few minutes of or last hour and a half of the day. In this area up here, we did nothing but consolidate in a rather tight zone between let's just say 75 and 85. So a 10-point area where we consolidated near the highs before rolling over and kind of getting some type of liquidation. And then after that, we rallied and got to move up higher. So that is kind of how the day went. All day long, because I missed majority of this move from D's low to the upside, I was looking for an afternoon pullback low. I did not want to be buying on highs, and I did not trust any of the pullbacks because we had failed to hold set of single prints several times. We didn't hold the set of single prints, large set that we had in B period. We attempted to go trend again and failed to go trend in what time frame? Let me look at this. We attempted to go trend in F period, failed. We attempted to go trend in G period and failed. So the fact that we couldn't go trend by holding a set of single prints Granted, we were one time framing up, uh, and we had an argument about that in the room today. Is one time framing up considered trend? And Paul made an excellent point today in the room, is that no, one time framing up does not justify trend. You may be moving in one direction, but because we began one time framing down here, right, in K period, does not mean we are going trend down now, right? Because we were one time framing up here does not mean we were trending up or going trend up. A trend means you have a set of single prints like yesterday. Yesterday was a prime example of one time framing up with a trend by holding sets of single prints on the way up. So today was not a typical trend day up with holding single prints. So I did not trust any of the pullbacks to get long. Now, granted, there were plenty of opportunities to take longs against the previous time frame's low to continue the one time framing up, but I was looking for an afternoon pullback low throughout the day, throughout the evening. So when we began consolidating up here near the highs in G, H, I, and in J, especially in I period, whenever we began consolidating, got a pullback here, I was looking to take a long position a little bit lower. We had a wide point of control that was being developed up here, and I was looking to get long around the 70 area to 71 area, right? And I was looking for that in I period. Now, when I period did not pull back, it kind of showed that, all right, maybe these buyers are a little bit stronger than I'm expecting, and we might not get that. And so when we pushed up in J period, I wanted to get long to see if we would pop the top, because it looked like we were just developing some stops up here, and that if we did pop this area, we would get a nice relief rally to the upside as shorts would begin covering and momentum buyers would begin stepping in, potentially getting us another distribution to the upside. However, that did not happen. J period rolled over, and I got stopped out of my position. I was long around the 85 area, and I had my stop I was relatively tight on the stop, and it was not large size here. So I did have a long position on, and then got stopped out of it, and that was not the bulk of my loss today. It was a 5 lot, not a very large loss there. Now in K period, it looked like, because J closed near the lows and right near where point of control was at the time. Where point of control was at the time. And so I was expecting K period to take out these lows and begin to get some type of liquidation break. And instead of sticking to my plan and looking for an afternoon pullback low and taking the trade where I wanted to take the trade and use F's or E's low down here at 67.75 as my out, which I would have done. I had it all planned out, was to buy near 70 and use that low as my out. Instead, in K period, I decided to get short a 20 lot. That's right, you heard me. I got short a 20 lot of the MES. I got short, so basically two minis is what I was the equivalent of. I was short right around the 75 area as we broke these lows and we began to push down, because I felt like maybe because we couldn't get new highs up here, we would get a much larger liquidation break and revisit the balanced low area. And I kind of wanted to recoup some of the loss that I had up here. So I was emotional about the trade. It wasn't the right trade. My emotions put me in the wrong trade here. Was I right initially on the way down? Yes. And I could have gotten out of the position for a decent win. But because my target, and I was expecting a little bit more of a liquidation break, my target was initially E's low and then value low. We never got there. And I had my stop up here at K's high at the time, which was right around the 80 level. And as we came back up, I was just being emotional. I did not take it off at break even. I instead let this market come up and then run against me, where I got stopped out of the trade for a nice loss. I actually ended up not respecting my stop. I moved my stop up roughly 4 more points because I was like, there's no way L period's going to take out K's high and stop the one-time framing. Maybe we'll revisit L's low. Nope. It popped and I got stopped out. My emotions, my ego, everything that I worked for this week crushed, right? So I did not stick to my plan of taking the long down here at the 70 area or the 71 area. Had I stuck to my plan and instead bought a 20 lot down here, because I was looking for this trade for, what was that, so roughly an hour and a half of the day, I was looking for this trade. It came to me, it presented itself, and I did not take the opportunity to take that trade because I was emotional and I was in the wrong side of the trade on the short side instead of looking for that long, which normally I would have taken, and obviously would have been a much better trade, right? Even if I wouldn't have gotten the 71 low, if I would have gotten back in at 74, we rotated back up towards the highs. And the high of day at the time was 79, or excuse me, not 79, roughly 85, 86, right? So I could have captured 10 points to the upside on a 20 lot, which would have yielded me 200 point gain. Instead, I took a 252 point loss because I was emotional trying to recoup some of the loss that I had in J period, and was just looking for something completely different. So, moral of the story is respect yourself, respect your trades, respect your stop. Stick with your plan. If you have a plan in place, you stick with it. You're more than likely right. Especially on a setup that you take on a regular basis, like myself. This afternoon pullback low, would have yielded me great rewards. So that being said, guys, I hope you guys take it from me. Don't take the wrong side of the trade. Wait for your setup. Take your setup without a doubt in your mind that the setup will work, and then obviously have your stop in. If I would have taken that trade here and used that E low as my out, obviously I would have lost points on the trade, but it was a part of my plan to take the trade on that pullback and then use E low as my out. Didn't do it. I was on the wrong side and I got hurt. So let's go over today's destinations. We can take out all these daily highs that we took out. We took out a lot of upside destinations today. And then a few of these downside destinations as we opened up in yesterday's upper distribution and right in the single prints. All right, so all we have today is, hold on, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we did end 10 wide. We have a 10 wide point of control at L's low. All right, so we have a 10 wide point of control. Today's high, afternoon pullback low, and the low of day where single prints start at 43.75 and they fill at 41.42. So I'm going to mark our 10 wide point of control right here at L's low of 77.25. 77.25. So if we open up above our point of control here, likelihood of us taking out our daily high here and our weekly high, odds are pretty favorable, and we should begin one time framing up on the weekly. Now, if we open up below, the 10 wide point of control will be an upside destination. So if we open up below 41.7725 or 41.71 and we cannot take the day's low out, then you'll look to rotate back up to the high here and get to this 10 wide point of control. So with that being said, ladies and gentlemen, I hope you all have a wonderful day. You stops, respect yourself. We'll catch you in next week's video.